So numbers
Actually, we have Naveen Kulkarni, the co-head of research, PhillipCapital, with us. So let's square your opinion with his. Naveen, what do you make of the cigarette revenues being 8,954 versus 845?
So roughly a 5% growth in the cigarette revenues, yeah.
The revenue number looks a little lower than what we were building in, but the EBIT growth for cigarettes looks very, very strong. So
16.9%.
Yeah, so we were looking at around 12% kind of a cigarette EBIT growth, but at 17% the number is definitely quite strong. So revenue, of course, there could be some bit of down trading to lower segment or some bit of destocking, but the EBIT growth is very, very strong. So that is a very encouraging sign here.
Right, Naveen, you speak about down trading to lower segments, maybe that could impact the revenue. So in your initial assessment, what do you think would the volume growth for the cigarettes be? Is there a chance that it would be negative, or what is the number you're ascribing?
I think probably the cigarette volume growth might be flattish. It's difficult to ascribe because we were looking at around 2% kind of a volume growth.
Right.
But since the number is lower than that, I would say the cigarette EBIT growth is still strong, but revenue volume growth might still be flattish is what I can assess at this point.
So you would say what, flat, zero, or marginally negative or positive? The volume.
It's difficult to say. Okay. I would say that it might be, let's say, around 0.1%, 0.2% kind of a number. Yeah, here and there only.
Okay. So Naveen, what we're working with is that flattish volume trends on cigarette, yet the market seems to be liking what they've seen in terms of the revenue growth and the cigarette business EBIT growth. We know the GST numbers now, so I mean, my question to you is, 303 plus with this kind of performance, and maybe a month or two of GST uncertainty and issues around stocking, destocking, etc. After that, what happens to ITC? Does it really take off, or would you expect this to be pretty much the range for the stock?
See, from a valuation perspective, I would say that ITC is not expensive compared to the other FMCG companies. And secondly, the biggest overhang on the stock was what could be the GST rate and whether it will be 40% or what. So that could have an impact on earnings. But since most of the things are clear now, and GST from an operational perspective is a big positive for the company. So that actually lays out the roadmap for more secular growth and better visibility of cigarette earnings going ahead. So I would believe that from thereafter I could see that there is further scope for re-rating for the stock.
All right, Naveen, thanks a lot for joining in.